I just know through my sources that it's very unlikely that the buyers of these silver eagles are retail buyers because the retail buyer is just not in this market yet. These dealers are selling out of their coins, and who is the buyer? And I believe it's the banks.
Hey, friends, thanks so much for joining us. I want to wish each and every one of you a very happy new year. We rounded out 2015 with that final interview of the year with V, the Guerrilla Economist. And now I thought, what better way to kick off 2016 than to talk about all things silver and gold with one of the heavy hitters out there, Keith Neumeyer. Keith Neumeyer, as you guys know, is the chairman of First Mining Finance. He's also the president and CEO of First Majestic Silver Corp, one of the biggest primary silver producers in the world. And Keith not only built one, but $2 billion mining companies, the latest of which is First Mining Finance. And Keith is here right now to join us and kick off 2016. Thanks for joining us.
Well, thanks very much for your time. It's great to have an interview in the first day of the new year.
Yeah, what a great way to kick off the year. And I just want to remind folks that you and I talked back in June of 2015, and you said, and I quote, silver should be trading anywhere from $75 to $120 per ounce. We can't maintain silver miners at current prices for very long. End quote. Are you as surprised as I am, Keith, that here at the end of 2015, as we hit 2016, we're at sub $14 silver?
Well, nothing surprises me anymore. It's just, the ratio continually goes higher, and I try to be positive. We hit at the, if you go back over the last 15 years, we hit a high of 90 on the ratio, and we hit a low of 38, in April of 2011, and we're now about, I guess, close to 80. So we're getting around the peak where it should, I think, level out at least over the next 6 months. I think it'll improve.
Well, it can't get much worse, can it? And, one thing I wanted to ask you about are market extremes. I want to talk about market extremes. I mean, we see extremes being reached on the COMEX with somewhere in the neighborhood of 300 ounces of paper claims for every 1 ounce of physical in the vault. With gold holding up so much better globally in terms of price than silver, again, 80 to 1 silver to gold ratio. I mean, it's amazing to me that you can buy 80 ounces of silver for every 1 ounce of gold. How are you guys taking advantage of these market extremes? And then I want to talk specifically about silver for the rest of the interview, if you don't mind.
Yeah, let me just go back to your intro. I just want to correct one thing that you said. You mentioned, First Mining Finance was my second billion-dollar company, and it's not $1 billion yet. It'll hopefully be my third.
But you have Quantum Minerals in there, right?
Well, that's right. First Quantum Minerals would have been the copper company I formed in the early '90s, and then First Majestic Silver I put together in the early 2000s, and then a decade later. Interestingly enough, a decade apart between each one of them, and now I'm working to develop my third billion-dollar company, which is, of course, First Mining Finance. And the similarity between the three of them, quite honestly, is the fact that I'm buying assets at the bottom of the market. When I was buying assets for the other two companies, no one wanted them, and people were actually thinking I'm crazy buying assets when I was, and like, what are you doing? No one else is doing that, and you must be nuts. And proved out right in both cases, and I think I'll be proven right again. And I've been doing this for 34 years, and I think I've proven in my career that I'm a good buyer of assets, because I'm a firm believer of, if you're going to buy assets at the top of the market, you're going to destroy value, and if you buy assets at the bottom of the market, you're going to create value. And I think that's what we're doing at First Mining Finance. We're buying gold ounces in the ground for less than $10 an ounce, which is something I've never seen in my career. And normally a mining company, and this is not, for retail investors, they probably aren't quite clear what that all means. But as a commercial miner, when we look at ounces in the ground, we know that it's going to cost, hundreds of millions of dollars to develop a mine, and so on and so forth. So there's a price that we're willing to pay for in the ground undeveloped ounces that have been defined by drilling. And these ounces in the ground are, of course, different qualities. It depends on grade, it depends on how close to surface they are, it depends on what country they're in, it depends on the permittability, and all the things that we look at when it comes down to making a decision on building a mine and then the economics around that. So in normal cases, over the last 30 odd years, a mining company would look at the ounces in the ground and pay anywhere from $50 to $100 an ounce. And that's common. And you could talk to anyone and everyone will confirm those numbers. And, we, during the bull market, between 2010 and 2012, ounces in the ground were actually going for much higher than that. But I'm just saying, an average over this 30-year period. So for us to be buying ounces at the current prices, in the case of the 3 acquisitions that we did in 2015, it's just unbelievable that we're able to build 8 million ounces of gold in the ground between 3 different mines in Canada in great jurisdictions, very good quality ounces in my view, and for the prices that we paid. So we're going to continue to do that.
It's an unusual model, which I think is very appealing because you guys are able to take advantage of the capitulation, right? I mean, there's absolute capitulation, especially in the silver market at this point. I mean, investors are throwing in the towel and saying, I can't take any more pain. Although I should say, if you take a look at the Silver Eagles sales for 2015, it looks like we hit another record with nearly 47 million Silver Eagles sold. So maybe the capitulation is just in the paper market.
Well, it's interesting you bring up the Silver Eagles because, we sell silver on our website, and I can tell you that retail sales of silver are quite low. And I'm seeing the numbers coming out of the Canadian Mint and the U.S. Mint and Australian and Austrian mints, and the numbers are quite high for silver coins and to a lesser degree gold coins. But I think personally that the commercials are buying them. I think the very sophisticated high net worth investors and banks and institutions are buying these coins up. And it hasn't been confirmed, but I'm very curious on who the actual buyers of these coins are, because I don't think it's the retail general public.
Well, that's interesting. And, actually later on in the interview, I was going to ask you about the cover of The Economist magazine in 1988, with the phoenix rising from the ashes of burning dollars, of burning fiat. And around the phoenix's neck was a gold medallion that said 2018. And the cover of the magazine said, "Get ready for a world currency." The suggestion being in 1988 that by 2018 we would have a new world currency backed by gold. I think that you might be right here as far as the commercials go. They sort of know the playbook. They can see the death of the dollar. They know 2-3 years out from now, we're going to be looking at whether it's an SDR basket of currencies or a new world's reserve currency, maybe led by the Chinese yuan. They know the end is coming for the dollar, and maybe the smart money is getting physical.
Oh, I 100% agree with that.
Now, I want to remind the audience, Keith, that you've got street cred with us because in October of 2014, you essentially declared war on the paper futures market by stating that silver producers should create a mini cartel and for at least 1 month withhold physical silver production from the market. I don't think that there was one CEO from any major silver miner that actually called you and wanted to join in that mini cartel, but we give you full credit for standing up and speaking truth about the comics and the paper manipulation and the gold and silver cartel manipulation. I mean, how many silver miners are going to be left standing at $10 silver? What can you tell us about this $13, $14 silver? Who can survive it?
Well, it wasn't just the majors that didn't call me. I didn't get a single call from any silver company, so it was a little bit shocking. And I thought it was a pretty practical request, and I thought it would be good for all the producers to just hold back their production. I wasn't suggesting stop producing. I was just simply say stop selling and hold on to the ounces for a period of a month. And I thought it would set a good signal to the marketplace and to the banks, and once and for all tell the banks who's boss, in this environment. Because if it wasn't for the miners, these banks wouldn't be getting the silver that they use to manipulate the markets. And the mining companies as a whole on a worldwide basis produce 800 million ounces of silver a year, and the paper market trades 1 billion ounces in a single day. So, the ratio you used earlier in the interview of, 300 ounces to 1 is, I think, a low estimate. I think it's actually higher than that when you add up all the paper that's traded on a global basis. So, it's ridiculous. And, I suggested, or I have suggested publicly that we set a system up whereby we create a maximum allowable ratio of paper to physical. Similar to the banks. Any of the big banks in the world, whether it's J.P. Morgan or whoever, they're only allowed to loan a certain amount of dollars out compared to the amount of dollars they have on deposit, and that's fixed by the federal government. So that prevents the banks from going too high on the leverage and obviously creating too much risk. So why isn't the same true for other parts of the financial sector? And it's just not the metals; it's also all commodities. And I don't believe that a bank should be able to just write short sell unlimited amount of paper contracts for any commodity, whether it's gold or silver. But the regulators allow them to do it, and so it makes it very difficult and quite confusing for people thinking, okay, well, silver's in a deficit right now. Silver's been in a deficit for the last several years. We're gobbling up physical metal like crazy. We're electrifying the planet. We're producing electric cars. We're fuel cell cars are on their way out or coming out, and robotics are coming out. We continually produce computers and cell phones and so on and so forth, and all the great things that we're doing with silver. That's not going away. It's actually increasing, yet the price continually drops. And it's all a factor of the fact that, we price our metal based on the paper market, and that's the flaw in the sector. And I think the whole thing's going to collapse because, eventually, the supply will dwindle. If this continues, supply will dwindle and demand will continually increase, and there just won't be any silver left. And all these banks who have been selling all this paper are going to have to, go and find the metal, and they're not going to be able to find it.
Yeah, you mentioned fractional reserve banking, and I want to circle back to that in a minute. But first, let's talk about silver supply. I see here from our buddy Steve St. Angelo over at srsrocco.com that U.S. silver production in September of 2015 is down 20% versus 2014. Let's just talk a little bit about supply. As we see silver miners being gutted and decimated by the price, right? A lot of these companies can't pull the stuff out of the ground for what they can sell it for in the open market at $13 an ounce, $14 an ounce. Let's talk about supply. Industrial demand is high. Investment demand is high. We don't know who. Maybe it's the commercials. Certainly little guys like me are buying physical silver. Let's talk about silver production plummeting. What does that mean 2, 5, 10 years out?
Well, a lot of it is coming from this zinc and zinc mines that are shutting down. There's two very large zinc mines on their way out. With copper prices and lead and zinc where they are right now, their prices we haven't seen for 15 years, and I'm referring to zinc and lead, and that's where a good chunk of the silver comes from, and of course then there's Mexico. We know that Mexican silver productions dropped 6%. For the first 6 months of 2015 compared to the first 6 months of 2014, and that trend appears to have continues. And the number that you just threw out earlier is quite interesting. I hadn't actually heard that one, but I have heard that we're in a deficit of around 45 million ounces so far in 2015. I think that number is as of August 31st. So this deficit continues, and a lot of these producers, and First Majestic is a little bit of a different animal because we've got 6 mines and we've got a ton of diversity within the business, and we've had our challenges. Don't get me don't get me wrong, but we've gone through a couple of quarters where we've been losing money, but we've been able to get our costs down to the $10 range, and we're doing okay. It's not a lot of fun, but we've had to lay off a lot of people and then change our business quite a lot, cut back exploration, cut back development, and cut back investments, and so on and so forth. So it's not as fun as it used to be at 40, 35, 40, $45 silver, but we're still getting along. But a lot of these other companies who only have 1 mine or 2 mines, have a lot less flexibility. And I know a lot of these companies who are right now producing metal at $20 and north of $20, and they're just burning cash, and time is ticking for some of these guys. And if we see these kinds of metal prices for another 4 4, 5, 6, or 12 months, there's going to be some blood continually spilled on the street. And we haven't seen all the closures that I'm expecting to see yet.
Yeah, I know it's getting ugly out there for many miners. Certainly, if you look at the prices, it's got to be scary because investors don't even want anything to do with these companies to the degree that everybody's been hurt so badly. Again, it gets me back to the capitulation idea. We have to be hitting a bottom here because there's absolute capitulation. People are running from the metals, which I think is what the Federal Reserve wants. But it gets me back to this idea of fractional reserve banking, right? You mentioned it earlier here in the interview, and I want to read just a bit here from Economic Collapse blog and our friend Michael Snyder, who writes, did you know that there are 5 too-big-to-fail banks in the United States that each have exposure to derivatives contracts that are in excess of $30 trillion? Overall, the biggest U.S. banks collectively have more than $247 trillion of exposure to derivatives. That is an amount of money that is more than 13 times the size of the U.S. national debt. And it's a ticking time bomb that could set off financial Armageddon at any moment. I wanted to ask you here about derivatives and how you see gold and silver as a monetary asset. Keith, how do you see physical silver and physical gold as a monetary asset with no counterparty risk in a world that is swimming in paper with counterparty risk?
Well, I think definitely gold is going to be part of a new currency system within the next couple of years. I just can't see the system holding up too much longer. We've been going on now for 30 years. If you go, this all started really back in the 80s, and it's just been getting worse and worse and worse. And the politicians have just allowed the system to continually get out of hand. And I believe it's about to burst. And we've seen the yuan get added to the SDRs, by the IMF, and I think that's a big, big change, and I think a positive change. We see the Russians, the Chinese, and many other countries around the planet, a lot of the Asian countries and Eastern European countries, buying gold, as a reserve, and they're doing this for a reason. These are the people inside and in the know, and we on the street here, we can't really know what's going on behind, closed doors and what the future is going to be. But, when you see, these big governments doing what they're doing, you know there's a change afoot. It's just a matter of time. And, gold, this is why I put First Mining Finance together because, of course, with First Majestic, we're very silver centric, but I wanted, to have a very gold focused company. As a result of my beliefs that gold is at lows and this is a buying opportunity of a lifetime, and I wouldn't be surprised to see $5,000 gold in the next 3 to 5 years.
Well, that sort of plays into my comment there about that Economist magazine that sort of predicts a gold-backed global currency by 2018. And then we mentioned the fact that maybe it's the commercials that are buying up all of these government-issued coins, because I think your thesis is the smart money is acquiring these precious metals. And then I threw it back to you, and you just said, yeah, I agree. Can we just flush that out a little bit? Who do you think is buying all of this physical metal, and why?
Well, it's got to be really the either high net worth individuals who are close to the banks or the banks themselves, and of course, the banks, on their financials, they don't need to disclose their holdings. It's just in a line item, so it's something that'll never actually be known. But I just know through my sources that it's very unlikely that the buyers of these silver eagles are retail buyers, because the retail buyer is just not in this market. And I go into these coin stores throughout Europe and in the United States, and they're empty. And yet these dealers are selling out of their coins. And who is the buyer? And I believe it's the banks.
That's so interesting, because as we step back and we look at history, you and I both know that this is a model that the banks have implemented time and time and time again, going all the way back to the Rothschilds, going back centuries. This is a playbook they use time and time again. Drive down the price of the assets that they want to the point where the common man runs away from those assets because the common man can't take any more pain. Meanwhile, these guys buy up those assets at pennies on the dollar. And I think what you're saying makes perfect sense. I mean, they're driving down the prices of the physical metals via their paper manipulation. And at the end of the day, they get to acquire the stuff they want in physical form at pennies on the dollar, preparing themselves for what's coming. And I don't think that's
Well,
far off. I don't think that's really conspiracy theory. Do you? I mean, I think it makes a lot of sense.
no, I think the financial crisis of 2008, 2009 was completely orchestrated. And I think it was known by the insiders, the banking insiders, possibly even the Federal Reserve itself, knew what they were creating and knew that there was going to be a crash coming. And I think that represents probably the largest theft in human history, whereby the banks were able to move in and buy up cheap real estate assets, from the individual on the street who just couldn't pay their mortgage, and it happened on a global scale. And then look what happened as a result. The banks came out of that much stronger than they were going into it. So, and it was all financed, at on the back of the government and the back of the taxpayer, and the taxpayer is who got screwed at the end of the day as a result of the financial crisis. Then the banks did extremely well as a result, and that is completely screwed up as far as I'm concerned. And the same thing's happening all over again, as you point out. They're driving down the metals, and it represents another huge theft that we're experiencing going on right now as a result of the low metal prices.
Yeah, I interviewed John Titus from the Best Evidence YouTube channel, who's done some absolutely remarkable forensic quantifiable research into what happened in 2008. And what you're saying is absolutely correct. He flushes that out with their documents, with the Fed minutes that had been released in the years after. And these people are criminals. I've been saying for a very long time, Keith, that at this point in human history, it's the banksters versus humanity. That may be simplifying it just a bit, but at the end of the day, I think what you're saying is absolutely correct. And my thesis has been one way to protect ourselves from an economic storm, right, where all the fiat collapses or goes up in smoke, is to have physical precious metals, assets without counterparty risk in your vault, in your own personal vault. I mean, it's what they're doing. We'd be stupid not to do the same.
You have to follow the money, and the sophisticated money, the big money, is going into metals right now. You don't see it, but just the fact that there's such a hate on mining, such a hate on metals, it tells you that you have to be on the other side of that trade.
I want to ask you one last thing here before we let you go. I think that the general public at this point, the investing public, also has a disdain for precious metals stocks because of what the cartel has done to the precious metal space and stocks in particular. You've got some heavy hitters involved in First Mining Finance with you here, like folks like Eric Sprott, correct?
Oh yeah, no, look, I've been doing this for a long time. So when I've made people a lot of money, in my last two companies. So, I've got a lot of support in the financial community. And when I was putting this company together, it wasn't easy. I can tell you that. It took longer to get public than I thought, and it was more difficult to raise the money. But the, guys who did write checks, Sprott Global out of California were big supporters. Eric Sprott personally. We also have the whole Haywood group. I'm not sure if your listeners know who that is, but they're a predominant mining finance brokerage firm in Canada, similar to Global. So Sprott Global out of California. They're basically the same type of firm, but Haywood's based in Vancouver, obviously. And also Doug Casey and Marin Katusa and the list goes on. So we've got a great shareholder base, and they love what I'm doing, and they're very supportive. And the industry really needs to have someone like First Mining Finance go in and clean things up. And I tell people I'm creating unemployment, and I think it's necessary.
I really appreciate your time. Do you want to just shout out any additional information that you want to share, tickers for any of your companies or anything like that?
Well, first, Majestic Silver trades on the New York Stock Exchange under the symbol AG, which is obviously a nice symbol that we're fortunate enough to get. And First Mining Finance trades on the OTCQB market under the symbol FFMGF.
Okay, and the final word, Keith, before we let you go. Do you want to give me your outlook for 2016? I don't know if we're going to have a global currency by 2018, but that's only a couple short years away. What's your outlook for silver and gold here in 2016?
Well, not only just silver and gold, but also for First Majestic and First Mining Finance as well. We were very fortunate enough in 2015 to be able to buy 5 companies collectively between the 2 companies. In the case of First Majestic Silver, we took out Silvercrest, and that mine that came with that company added our 6th mine to our portfolio, and another 5 million ounces of production a year on an equivalent basis, and so it's a great asset that came into our portfolio at a great time, and we were able to take advantage of that, in a very soft market. And in the case of First Mining Finance, I think we overachieved. What we expected, that we got public, we became public in April of 2015, and then within 7 or 8 months, we were able to buy 4 companies and go from 0 ounces, even though we had 18 assets in the portfolio. None of those projects had actually defined ounces in the ground, and when I say defined, I mean drilled defined ounces. Even though we do believe there is gold in the ground in those 18 projects, it's not yet defined. They're too early stage. But in the case of the 3 acquisitions that we did, it came with about, or just under 8 million ounces of defined, drilled 43101 compliant gold ounces in the ground, which is a huge achievement. And prior to us going public, we identified several targets, and the 3 of the 4 acquisitions that we did in 2015 were in our top 10 targets that we had identified. So we're pretty excited about being able to accomplish that, and we hope to duplicate that in 2016. In the case of First Mining Finance, we hope to at least do 3 or 4 acquisitions in 2016. Time will tell if we're successful in getting those acquisitions completed, but we do have our targets outlined for the year, and we're going to be aggressive, and hopefully we're successful in continually building the portfolio. And when it comes to the prices of the metal, 1370, 1380, I think is where we're trading today on silver. I think we're there. I think that whether we're a couple of percentages from the bottom, who knows? But I'm looking out. When I'm building companies, I'm looking out much further than the next couple of months. It is hard to predict, short term, but I'm pretty, convinced and pretty certain that we're going to be higher for both gold and silver prices at the end of 2016 compared to where we are today.
Yeah, and one thing we know for sure is there will be a lot more U.S. dollars in circulation electronically and otherwise at the end of 2016 than there is today. Our guest has been Keith Neumeyer, one of the smartest names in the business. And guys, we try to get on the smartest names in the business. Keith, we just had Eric Sprott on recently, and what a gentleman. He could not have been a nicer guy.
No, he's a big advocate of the industry, and we need people like Eric in this industry, to really tell the story of what's really going on out there.
Yeah, well, that's what we're trying to get to here. We're trying to cut to the core of the truth. And Keith, if people want to follow you out there in social media, can you tell them how to do that?
Sure, I'd love to. On my Twitter account, the @, my first name Keith, Keith, _ my last name Neumeyer, Neumeyer. So @Keith _Neumeyer, and I'd be happy to have more followers.
Yeah, absolutely. Well, God bless. And guys, thank you so much for tuning in. Our first interview of 2016, and many, many wonderful guests lined up here to come. May 2016 bring you blessings and great joy. Thanks so much for your support at sgtreport.com, thelibertymill.com, and thephaser.com. Real news 24/7. God bless.